they don't talk. Hello, everybody. Thank you so much for coming. Welcome to Bruegel. We're going to get started. Maybe somebody wants to close the door just so that we can minimize the noise in the room. First, my name is Rebecca Christie. I'm a visiting fellow here. Thank you so much, all of you, for making the trek over to be here in actual person. I know we have a lot of people walking on the web, and we're very happy to have you as well. But it's really great to have a room full of folks to have a great energy. So thank you very, very much for coming. We have a great panel today. I'm very excited to be talking to you all about the future of payments with these folks. We have Chirag Patel, who is an executive vice president and global head of payments from Banco Santander. Then we have Etienne Rosa from the European Payments Council. We have Jörn-Jakob from Trustly, which is a service that I suspect many of us have used without necessarily knowing it. Johannes Vermeer from the Belgian Fintechs Alliance, and then my colleague Nicolas Véron here from Bruegel. We're going to hear a little bit from each of our speakers just to set the scene at the beginning, and then I hope we will have a very good and free-flowing Q&A. So by all means, whatever's going through your mind about payments, about alternative currencies, about technology and finance, be thinking about how that ties into what you hear, and please don't hesitate to speak up and ask a question. So with that in mind, I'm going to give the floor to Chirag, and thank you so much for joining us and for catalyzing this event, because it really wouldn't have happened without you. So thank you.
Thank you. My pleasure. Hello, everyone. So what I wanted to talk about was just to give you a little bit of insight into how Santander is thinking about payments and their customers, and the fact that they've actually had to evolve. Payments is changing dramatically, and I think it's speeding up with all of the recent announcements, and the way that we traditionally think about a payment as a transaction has changed. So it's no longer a swipe of a card or a press of a checkout button. It's when does the customer actually start to think about making a payment? So, in an e-com environment, if they're trying to buy a television, what are the financing options that are available to them? When they're at a POS terminal in a physical store, how can they check their balance to make sure they've got enough money in there? So understanding that entire life cycle is so important. And what we've understood in Santander is that payments is also a driver of loyalty. So, you may take out a mortgage 3 or 4 times in your lifetime if you're that unlucky to have to go through that process. But, payments can happen 3 or 4 times a day. So if you don't have a good payment experience, which is seamless, transparent, and secure, then you're not building up that loyalty relationship with your customers. So it's so integral to that. What we've also seen is that payments is ripe for disruption because it's complex. There are so many different players, so many people in the value chain that are providing services, and it's no surprise that you've got fintechs and startups coming in there and rethinking it. One example that has really driven a lot of change internally for Santander is international payments. The easiest place to make an international payment is from your bank account. But there are such big fintechs coming out there like TransferWise and Revolut, because they're building on the fact that the customer experience that traditional banks have delivered in this space is frankly terrible. So they are driven to these new services because of the lack of customer experience. So what we're trying to do as Santander is to really think first about the customer experience, not so much about the profitability of the account, and more about the long-term relationship that we want to nurture with a customer, and embrace the tech community. I want to work with startups. There's a great opportunity for us to learn from them, to get new ideas. We invest in them thoroughly. And quite frankly, even my team, I have hired a ton of people, great people from within Santander who know how banking works, but a vast majority are coming from the fintech world, the startups, the big techs, and that is a cultural change that we're very motivated to create within Santander.
Excellent. Thanks very much for that. Etienne, where are we and where are we going?
Yep. Good afternoon, everyone. Thank you very much for inviting me. Actually, DVC, just a few words, is actually an institution that was created by banks, actually to try to foster harmonization of payments in Europe, pushed by the regulators to be true. And actually, I've always thought that payments were fun, but payments are even more fun now. And why? Because actually everything is accelerating. There are new players coming, so it's not just some experts talking about payments. Now it's back to the whole room of many institutions. It's full of new players, niche ones, very large ones. So, I mean, we are really, as was said, in a time of major change. And acceleration is clear.
Etienne, can you also use the mic so people in the room can hear you? Because for whatever
The other one doesn't work? Yeah, this one
it may
works.
only be working for the
Shall
web.
I rewind or?
No,
No, you heard sufficiently what I said. And I think back to acceleration, I think this is really something that is a major change. So moving from where we were to harmonize credit transfer and direct debit schemes took 12 years. Moving from nothing to real-time credit transfer will take 5 years. And I'm sure that actually making out of that something more, because credit transfers, if they are real-time, actually enable much more use cases, will take even less time. And actually, the clock is ticking. If European PSPs, especially the incumbent ones, want actually to retain a role in payments, want to keep a share of the value, actually they have to act. And their strength is their weakness. Depends on the numbers that we quote, but there are 4,100 PSPs, as we call them, payment service providers of the traditional type that we know of. I know statistics show sometimes more, but in order to do something, you have actually to bring them together, so to speak, towards something that is common. And that takes time, which is inherently actually a weakness vis-à-vis other players that decide among themselves, that have the ecosystem around them, that actually have wide pockets just on their own. So this is the challenge, but we believe that actually this challenge can be met, that we can actually make altogether something for Europe, because at the end that's what we also ask, to make sure that Europe remains on the map of payments. And you have probably seen what the Commission, what the Central Bank have said, and also national regulators. They believe that now payments are a matter of European sovereignty. And we believe that humbly, as far as DPC is concerned, we can help that, but the clock is ticking. So we have to do a lot of work, especially this year, to enable SCT Instant, which is the real-time credit transfer, to become something with which we can do more among Europeans, for Europeans, and very much so with customer needs and customer journeys in mind, which is something new. Payments in the past, we were talking about pipes, standards, messages. Now, we actually start from customer journeys, which is a revolution, because that was not the way payments were looked at. And I think that's the right way, because at the end of the day, we'll only succeed if we provide value to the customers, both the payers and the payee, so consumers, merchants, corporates. And that's what we are trying to do. And at the end, of course, the market will tell, because it's only if what we do has value and has meaning to the ultimate customers that actually this effort to try to keep the European payments European will succeed. And that's the challenge. And that's why, as I was saying, we have little time. That's why we are doing a lot of things this year, always with stakeholders, because like war, which is too important to be left to generals, we believe that actually payments need all the stakeholders around the project, because at the end of the day, we need everyone to buy into it, support it, implement it, and also contribute to make it of value and actually bring to the customer the experience that he or she wants. And alone, I don't think we can do that. So that's the challenge, but we believe that we'll be able to meet the challenge, but again, we also believe that the clock is ticking. Thank you.
Thanks so much for that. And let's see, Jörn, if your microphone is turned up enough. I got the feeling, how are you guys in the room for sound? Are we getting feedback? Can you hear? Maybe if you guys can turn everybody up, excellent. But we'll try it with just one mic per person going forward.
Okay, I'll try. Well, I think it's loud enough, yes. So perhaps a couple of words on Trustly, because you may not yet know it. So it's a Swedish company, a payments company that provides online payment solutions, basically account-to-account payments. So we have, of course, we have existed for more than 10 years. So it was founded in 2008. Trustly is present now in 29 countries, or enables payments in 29 countries in Europe. and we bought actually, or not we bought, but we merged actually 2 weeks ago with a US company, Pay With My Bank. So that is then to enable also payments to go across the pond between the EU and US. So obviously, sort of our main focus in terms of European legislation has been on the Payment Services Directive, or PSD2, that was sort of set to enable new competition. But of course, we know competition has already been there before. We are one of the companies that has been active before in the payment markets, and as Chirag pointed out earlier, the payments market was, I think, right for disruption and ready for disruption. So we are, if you like, one of the disruptors. For us, of course, the main challenge at the moment is to make it work and sort of to make the regulatory changes work, because what we have, of course, is PSD2 on the one hand that opens up the market, but then you have also the level 2, the regulatory technical standards, and we are currently still working towards implementing those and making sure that the payments market that has already developed in terms of account payments also works in the future in this new environment where banks can control a bit more of what data they would provide to consumers. That's it.
And Hannes, you want to tell us what's going on in Belgium, where we've come from and where we're going?
I'll try to do so. I'm CEO co-founder of POM. POM tries to bring peace of mind and invoice payments. So we're actually in the space of payments. I'm a member of the board of Fintech Belgium since that has been created back in 2016. And with Fintech Belgium, we represent 95 at this moment Fintech and broader, in the broader sense, Fintech, RegTech and InsurTech companies in Belgium. We're a really grassroots organization, so it's on a voluntary basis that everybody takes part in the board. And actually our purpose is 3 things. One of them is to promote our Belgian fintechs, not only in Belgium but also internationally. Share our knowledge, so we organize a lot of meetups in a year. We also have a big summit in October where we bring together all the parties, all the fintechs, but also all the surrounding parties, the stakeholders in the field, and also dialogue. We dialogue with not only, between ourselves, of course, but also with the regulators, with the government, and also with other organizations like Fabelfin and the organization of the Belgian banks, and Beehive, which is also representing part of the fintechs. So yeah, how do you see it evolving? I think what we've seen in the past is that, and I think is really that we were disruptors, and fintechs were seen as the enemy of the incumbent banks in the beginning. Enemy is maybe a big word, but anyway, I mean, we were disrupting. What we see more and more is that actually we work together, and actually the ideas that fintechs have are being, let's say they've been getting more and more connected towards the banks, and banks are actually working more and more together with fintechs. And we see it in Belgium, and we see it also internationally. I was in Madrid some weeks ago with a colleague bank of you, and you really see that they have these programs to actually work together, and also not only do some spokes together with startups, but also to see how to fast integrate their services into the services of the banks. So I think things are changing quite fast, and to the good, I would say, with a lot of new ideas, with a lot of new partnerships.
So we've heard a lot about customer relationships and focusing on making the payment experience pleasant as opposed to strictly profitable, and coming up with common standards for how that'll work. What nobody's brought up yet is with what currency we are making those payments. And Nicolas, maybe you could set a little bit of a scene for us there in terms of traditional currencies and maybe some of the alternative tech-driven currencies that we are hearing about today.
Well, certainly the euro will play a role, but at least for the time being. Beyond currencies, I will talk about policy, because that's in our title, right? Policy implications of the new developments. And obviously, this is a very policy-driven industry, heavily regulated, and for good reason. At Bruegel, we're sticklers for due disclosure. So let me start by saying that I've been for many years a board member at the derivatives trade repository arm of DTCC, which is a commercial operation. I don't think it creates any conflict with our topic, but it's still worth mentioning. I'll ask three policy questions, not just on currency, and I'm sure we'll talk about Libra at some point, but on the whole space of payments and actually fintech and the technology-driven developments in finance. One is the governance and supervision of data. I think it is now an established fact that data is a regulated space of its own, and it does interfere a lot with the financial space because finance is all about data. But because we're in Brussels and it's one of the global capitals of turf, data regulation and supervision is not the same turf as financial regulation and supervision. And this is a big disruptor for the financial regulators and supervisors because suddenly they have new friends. And this happened a few years ago in this town with competition policy. But data policy is another set of new friends on a social network or elsewhere that financial regulators and supervisors have to deal with. And I think the broad implications of that for financial services policy are just only gradually starting to emerge. The second policy question or framing remark I will make is about big tech. Because fintech is one thing, another thing is big tech. While commenting on Libra a few days ago, Mark Carney, the governor of the Bank of England, said if this happens, it will become instantly systemic.
Remind people what Libra is.
Libra is this proposed, how should I call it? It's not a currency, but it's a means of payment. Proposed by Facebook and an association of which Facebook is a member. Facebook, by the way, being a member of Bruegel, and it is at this point a project that isn't live, but has the potential of some impact on the payments landscape. And that's the context in which Mark Carney was making this remark. Instantly systemic is something you don't hear very often. If you think of the players that are systemic in the financial space, they're typically players that have been around for a very long time. So this is a challenge. Now, the question for big tech, seen from the point of view of financial regulators, is there's a risk in letting them in too easily because they can accumulate enormous market power in terms also of access to data and exploitation of data, and that can be dangerous. But at the same time, the financial industry will make surely a lot of effort to keep them at bay, to protect their incumbent protection, and we've heard already of customer experiences, for example, with international payments, as Chirac told us, that are ripe for disruption. So I think policymakers generally, specifically those with a responsibility for financial stability and financial customer protection and the like, have a very difficult balance to find between letting the new players, the most disruptive players, whether fintech or indeed big tech, in too much or too little. And that balance will not be easy to manage. The third and last point is about supervisory architecture, because we're talking about supervision, but we're talking about global companies, global solutions, global applications, border hopping applications. And as everybody knows, in financial regulation as in other matters, and indeed in data regulation as well, our authorities are national. And even in the integrated European Union, for non-bank services, there is extremely little, trade repositories being a rare exception, that is supervised at the European level, not at the national level. So is our supervisory architecture fit for purpose in Europe? That's a big turf question. But also at the global level, is the global supervisory architecture fit for purpose? If you think, for example, of cloud services, which are increasingly systemic in finance, because it's such of an increase of security, decrease in cost compared with in-house solutions, this is also a matter of systemic risk. the issues of how to monitor this risk and supervise the players is, I think, a major challenge, not just in terms of the balance between, too much or too little entry from the tech space, but also in terms of what kind of institutions we have to deal with it.
That is a great set of questions. I'm going to kick it back to our panelists. Broadly, I'd like this half of the panel to talk about licensing and competition and interaction between banking and new sectors. And I would like this half of the panel to think about fees and pass-throughs and who's going to pay for this and how that's going to work. So with that in mind, we'll just start at the end and we'll come back down. Try it. Can we turn at the end on? Technical difficulties. Thank you, everyone, for being with us. Okay.
Yes. It works.
Working now.
Yes. I think big techs are here to stay. So I think we cannot say, well, we should ignore them. They are here to stay. They are in our pockets. They are in the minds, especially of our kids. So they are here to stay. But I think what the role of the authorities is to ensure that competition rules be respected, that data protection rules be respected. And I think a lot could be said about the way the GDPR is actually in practice respected. I'm sure we all have experiences about that. But also it's a question of, at the end, of industrial policy and level playing field. PSD2 has opened payments data to other parties, fine. But where is the reciprocity? I mean, how can the banks or the other PSPs, payment service providers, have access to data that sit in those big techs databases? That's absolutely not currently on the radar screen, and so that's where I think Europe is unfortunately an expert in creating unintended consequences and unilateral disarmament without thinking about it. And then when it's there, this is what will happen. Oh, I didn't think about it. And I think there is, in that sense, in my view, a lack of vision, very good focused intentions, or at least, with a vision, but not the global vision and what will all those changes lead to. And then when this is apparent, given the time it takes to legislate or to intervene, are we not too late? And that's, I think, something that is of concern, is that actually, as I said, a number of big techs are definitely here to stay, or are certainly valuable, but are they not helped? Not willingly, but unwillingly. And are they bound to the same rules, to the same standards? Are we not just a bit naive? We speak of digital native. Are we not digital knaves? That's the question I would put.
It's a great question, and how we handle the intentions versus the unintended consequences is a big challenge in this space. The first time I was at a banking conference and someone mentioned disruption, it was in, I'm trying to think, but back 2008, 2009, and we were just in the middle of the start of what would be a global financial conference. And you had this futurist tech guy saying, we really want to disrupt the banking sector. And you had a bunch of bankers sitting there white-knuckled going like, we've had quite enough disruption, thank you very much. We would like things to work. And both sides knew what they were talking about, but they weren't speaking the same language. So Chirac, how important is it for regulators to require that newcomers to this space have a bank partner, have somebody who's experienced to have a banking license? Or should they be allowed to go around some of the old banks? I mean, this has been a question I've seen regulators hemming and hawing over for a few years now.
So maybe I think about it a little bit differently. And I think everybody likes to try and put all these different entities into specific buckets. I mean, we were in one of the European buildings today talking to some people who represent the Commission. And they were educating me on what is a big tech and what is a fintech and what is a startup. And the fact is, it really doesn't matter. What these companies are doing is there may be differences on the level of investment they can make or the speed at which they can operate. But the simple thing is that they're building products based on customer needs and trying to fill that gap. And everyone who's doing that should be on a level playing field. So while you can sort of say that now fintechs have got access to payment information from banks, however, the fintechs or the merchants or whoever it is on the other side, they're not providing any data sort of coming back. But that means that's not that you only have payment data to provide payment services. You need full sets of data. You need to understand exactly what somebody bought or whether they bought a bottle of champagne with their meal. Banks don't see that visibility into it, but then they can provide loyalty and services that go along with that once you get that granular level of detail. Not to mention they can have better credit scores and approve more people for loans, etc. So I think you've got to think about the breaking down of those traditional barriers, but then also, I don't even like the word disruption. I think disruption means something negative. But really, disruption is rethinking what was happening before in a better way that meets customer demands. So I actually would say that we are willing to partner with fintechs, with big techs, and others in the right way to ensure that we have a level playing field. But then banks do have the experience of protecting customers, managing their money. That is the bank's role. That's their primary role. You've got big techs that come in. Their primary role may be advertising or social or retail, for example. So, utilize the strengths and where they are in the industry, and ultimately the customer is going to benefit.
And if I can just follow up on that, where do you see the role of the bank run? When it comes, who does it come for, and who needs to be the intermediary between the customer and all of the money going in a different direction?
So banks have probably a ton of customers. Santander is nearly 150 million. That also means that we have 150 million customers we can listen to and understand better. Startups kind of don't have that benefit. So, banks can help in that sort of sense. Do startups have to go and build absolutely every single feature and capability? Is it really the best use of a startup's time to go and build payment rails and connect to all the local domestic payment commodities and manage those rules and regulations? Or is that really the expertise of the bank? So I think everybody has a very strong experience and a set of skills to offer. But we really should be working together in this context rather than kind of fighting over it. But obviously, to work together, you've got to have a level playing field.
Thanks. All right. So, fintech experts, what are the costs of this? Who should be paying them? And what do you see as a thing that you can do yourself? And what do you see as a thing? That one really needs somebody with a banking license and therefore central bank oversight.
Yeah, perhaps I'll start here. Perhaps sort of coming back to the point you made earlier, fully agree that, the ultimate purpose is always to build products that are used by consumers and that are better and sort of easier to use so that they can, use them very easily. And I think that was sometimes probably missing a bit sort of in the more traditional banking model. In terms of, but that also means we are, of course, also willing to engage with banks, and we work very closely with banks. We also see them as partners, not only as sort of competitors or disruptors. So I think we are welcoming sort of banks and want to reach out to them. In terms of data, what we like always as a concept is that you as a consumer can choose to share your data, or you allow access to your data. But of course, that means those entities that are allowed to use that data should be sort of should be regulated to some extent. You would want to make sure that if you do share your data, you know whom you're sharing it with. So I think that's a legitimate concept, and that also can apply, of course, to big techs. If you have a lot of data, then as a consumer, I should have the right to share that. If I want to use a certain product, I should be able to say, okay, I want to share that data with this new company or with this sort of company. And that may also be the bank, if the bank would want to have some data from another sort of service provider. I think that in principle should be feasible as well. In terms of who pays for it, well, there's sort of always the two models, I guess. The one is still you pay sort of with money, and ultimately, although in our business model it is the merchant that would pay because we offer an easier solution for them. But of course, you do have the other solution, which is paying with your data as a consumer. And again, there you need to, I think, evaluate what is your preference. I mean, are you willing to pay for a service and thus are you then able to control your data, or would you want to use a service for free but sort of effectively paying with your data?
Yeah, I've followed Jörn-Jakob and Jacques as well, saying, okay, we go to a more open banking cooperative infrastructure or society. And again, paying the cost is normally driven by the one who benefits from it, but the cost, we see there's a pressure on the cost. So the cost of transactions goes down more and more. But I think there's true benefits from. When we look at banks, we see typically there's two philosophies there. There's like a bit, okay, we want to remain the single user interface towards the customer, and we see this as a selection in choice of some of the banks, and we will put a lot of extra functionality in it, and that extra functionality can be delivered either by us or by others. So that's one way of looking at it. But we see another philosophy in looking at, okay, well, I don't have to be in the front, I can be in the back, but I can deliver services that are relevant to the service that I work with me. And by delivering these services, being, for instance, the infrastructure for payments, we get information back. Again, we get data back, data on which we can base ourselves, on which we can use to offer additional products. And I think this is probably I believe most in the second thing is really banks are opening up. They will work together with fintechs and other players in offering as an infrastructure layer anyway the possibility to do transaction processing, but on the other hand as well to be able to this way collect far more data so they can offer far more products in the financial sector, which they wouldn't be able to do if they would keep on standing on their own. So cooperation is the key, I would say.
Cooperation and working together, and are you going to pay for the service or are you going to be the payment for the service? These are questions we're used to answering in other walks of life, but in our banks, it's a bit of a new thing. Do we have any questions in the audience? And also, I don't know, who's got our audience Q&A mic? Excellent, it's coming. Maria, I think you're going to ask the first question, and I'll give you my mic while the other mic comes. And then, who else has questions? All right.
Thank you, Rebecca. Thank you to all the panelists. I think it's a very important discussion we have. The tech enablement of various processes, including the payments process, is of course is here to stay. I mean, I agree with you. The future is tech enablement, and that's it. I want to follow a little bit the logic of Nicolas' intervention, who said something about policy questions. And on the policy questions, the deeper objective there is identifying risks and catering for them. And I think there is an element here that I have one that I would like to sort of throw in the conversation, and that is a number of you called it sort of the customer experience, and making easier payment systems for our customers and making accessibility effectively. There is a very interesting line of research that's coming from the US. There's a survey done on millennials who use digital payments through their mobile phone. They've identified that those who are more likely to use digital payments are also more likely to overdraw on their accounts, and actually, if you look deeper, they are even financially illiterate. Now, financial illiteracy is a set of problems that stay with you for the life cycle. You come in with serious financial vulnerabilities if you're financially illiterate. And what's interesting about this is that there is a negative correlation. So the more you're likely to pay with digital-enabled methods, the more illiterate you are. And now, this is not a causality, but I think they've done this survey a number of times because they couldn't believe the result. Well, what's interesting about that, what it's telling us is that the threshold for accessibility can be a dangerous thing. If you lower the threshold of enabling people, have you really thought about how you can make them financially vulnerable? And that's an important thing. If you think about Libra, and I'm sure we will have questions on Libra coming here, What Libra is doing is going to make that customer experience. That's what it's going to do. Through the WhatsApp application, you're going to be able to, on a one click, to pay. And Facebook and WhatsApp has got 2 billion customers. You're talking about systemicness, what Mark Carney called instant systemicness here, and customer protection becomes a huge issue. I worry about this. I mean, the survey that was done in the US is not done in Europe, but we're hoping we'll be able to do something like that, just to establish whether there is a correlation of that sort. And then I actually believe that making some of these things a little bit more difficult will increase the threshold. If you think of Bitcoin, Bitcoin is a very difficult thing to issue, right? I mean, if you want to buy a Bitcoin, it's not an easy thing. But if you want to buy a Libra, it will probably be a very easy thing to do. It's not on yet, but I worry about that. And so if you're making something, we're confusing, I think, digital savviness with financial savviness. They're not the same thing. My 8-year-old son can easily do all the stuff on the computer, and I'm sure all kids can, and next generations will do it much easier. He doesn't have the financial literacy to.
So, Maria, that's a great question. And for those of you online, this is Maria de Mertzis, our deputy director, who works on these issues and on financial literacy. But, well, I shouldn't say but, and in addition to raising this question of the life cycle of the payment, which Chirag brought up at the beginning, should you see your balance flash before your eyes before you even think about what you're going to pay, or should you be able to pay seamlessly with your phone? Do you buy a Libra like you buy beer tokens at the fair, or is Libra a payment system like Apple Pay that you have set up to enable you to use other means of exchange? These are questions that are very much up in the air right now, depending on what you use and how you're using it. Do we have any more questions from the audience? We have another mic. Okay. All right. So we will start in the back, and then Michalis, and then Oliver, and then Karsten.
Thank you, Mr. Chair. Good evening, citizens. My name is Angelos Karlaftis. I agree with Maria.
Can you speak a little bit more into the microphone? I cannot hear you.
Yes, I agree with Maria. There is a big concern about what's going on. At the past, in the ancient times, we had the currencies and way of payments for the citizens. For example, in ancient Rome, in ancient Greece, every city could have its own currency, which was based on a value, on a specific value, which was gold. Today, we don't have this. So, what is the value of Libra? And this Libra system, which they are going to put us in, is it applied to the value of the banks? No, it's not a bank. So do we give the ability to a virtual society to control our lives on the real world? Yeah. It's going to happen if we don't stop it. The bank system is a bank system. It must be a reliable system which has to fix its values, because the values were lost with the last changes of the 70s, 1970s. So these values must be rebuilt, because we cannot build in societies of credit. Debts.
Well, that's a really great question, is where is the value and how much of it is the payment and how much of it is backed by underlying money? Okay.
Ending, about the data implications, as I'm also in the ICT, we have a lot of data implications because, for example, the Chinese, they have a technology right now where you can pay by your presence, by your figure, with a machine which identifies who is the payment guys. In Sweden also they are experimenting with some chips they put on the hand, so you can pay by the chip. These technologies, they are not so human-based technologies, and they assist the debt societies. Thank you very much.
Thank you. Michalis, just there.
Hi, I'm Michalis. A lot of Greek accents, I heard. What's the third one? Thank you. I have two questions. Based on what Nicolas said, I think, building on Maria, is there a way to build a system like in the banking and financial world around knowing your customer? So building on what you're saying, so knowing your customer's customer. So how easy is that to build in a new big tech, let's say, payment world? And the second question relates to bundling of services. So how different would it be now with big tech to discern the bundling of services? So how difficult would it be for me not to know or know which of the services, Libras, Facebook, or whatever, and which is not? So it's more of a competition issue. Are there tools there for that? Or is it more difficult in the digital world versus the current traditional centralized banking world? Thank you.
And this is a question from DTCC, which we previously have talked about through Nicolas. Then we had a question in the front row here. Two questions in the front row, and then we'll kick it back to the panel.
Hi. Oliver Grimm with the Austrian newspaper Die Presse. Thank you for this. A bit more to the point on the Libra that was raised by you. Why on earth should we trust a company like Facebook that is not opening its hood to let regulators look inside how its miraculous algorithms actually work, whether it is actually strengthening disinformation, whether it is actually nudging us towards behavior that is very antisocial and very self-destructive, that was openly experimenting with manipulating psychologically weak persons. These experiments where they were testing how people reacted to certain information and whether that would take them down rather a dark road or not, and so forth and so forth. A company that is actually not open, transparent, responsible at all, and that only finally acknowledges things after they've been in the New York Times or somewhere else. Why on earth should we trust them with money? And that actually a decade after the big disruption you mentioned that destroyed lives. I'm a liberal, I'm pro-free markets and so forth, but I'm shocked by this techno-boosterism around Libra's Facebook announcement now, where people say, well, this is inevitable, they're going to do it, it's here, no, at some point we really have to ask ourselves, is this a bank? Well, if they want to be a bank, there are rules for banks, and the reason why an international transfer is very cumbersome is, well, there is anti-money laundering, there is anti-terrorism financing. You have to make sure the money doesn't go anywhere. You have to make sure tax authorities can look into it, and so forth and so forth. So,
yeah, and this ties very nicely into our first question about where is the store of money and who are we relating to and where is it going. Karsten from Santander, I think, also has a question, and then we will kick it back to the panel. We'll do a little run-through of the questions we have.
I think what you just said from Austrian Press, where are the rules? I think it's great that we bring this discussion back to the rules and the title, policy implication of new developments. We, as in Santander, we have invested in lots of fintechs recently, but we see the next step, the next quality, the next level is very difficult. And so my question is probably also to the two representatives of fintechs here. We have the whole prudential regulatory package, which again was well-intentioned after the crisis in particular, but some consequences are now there where we all move on becoming a platform bank like Santander. So we cannot invest in a fintech and take a control majority without having the whole prudential banking regulation being applied, which means it makes it basically not a good business case anymore. And what we hear very often from you guys, please, Santander, buy us, because we don't want to be bought by a US or by a Chinese company. So my question is, do you see the same kind of problems? We face a lot of problems when we sit down with fintechs and say, well, we explain them what the bank regulation means. They say, oh yeah, but then I don't get that bonus anymore. So nobody's really attracted anymore. And I think this is another issue for the European regulatory landscape. We want to nurture fintechs and want to be European digital natives, but we throw the new startups, the great new European inventions to US and Chinese investors. And I just wonder what's your take on that one. Thank you.
It's a great question. So just to run through the questions that we had the first question about, where's the store of value and what is Libra? Is it a currency or is it a means of exchange and how is that working? Then we had questions about how do we build a system of knowing your customer? How does that interact with the banking authorities? Why should we trust Facebook when they're not showing us their algorithms for their social data? Why on earth should we trust them with our financial data? It's an interesting question. And then how does this fit with the regulatory package? And does fintech have to sell out to big banking at a certain point to be able to interact with the central banks and with the global financial architecture? So I think we'll just start on this end and then just work back around. And y'all can all be thinking about your brilliant insights. Johannes.
Okay. Go ahead. Yeah, I'll pick up the question regarding the regulatory package. I have a little bit, and we feel it as well out in fintech Belgium as well, that it is not an easy task for a fintech to comply to the ever more complex regulatory package that you have to follow. And second thing, what we see as well is that we see that the regulator has traditionally been more used to talk with large banks than to talk with scale-ups and startups. So we try to go and what we try to do is also to represent our members and to get into an informal context as well with the regulator in order to discuss this kind of problems and try to see how we can ease them. But you're definitely right in the point that I have the feeling, and I know Belgium, but I heard another country as well, and I'm sure it is another country as well, is that at this point we need regulation, but it's too heavy for fintechs, and the kind of proportionality should be taken more into account in order for us to start growing. Because I just saw some investment figures from China, from the US, compared to Europe. We're lagging behind enormously, whereas we were more or less at even with China until 2014, EU compared to China. Now, as of 2014, China started to raise enormously in terms of investment in start and scale-ups. The same thing happened, already happened. It was already happening in the US. And Europe is just picking up now. And I think one of the things is there as well that regulation is very important, but we need to find a way how we can, I wouldn't say make more easy, but at least get into a process that we can help startup and scale-ups to actually comply to the regulations, so that indeed they become an interesting target for banks like you, and the business case is positive. So yeah, that's a challenge.
Yeah, I mean, on the regulatory framework, I mean, in the case of Trustly, I mean, we've already had a license under PSD1 so as a payment institution. So I think there are certain regulatory requirements, and so sort of obviously now under PSD2, we now have additional licenses also as payment initiation service or account information service. So I do think it is, since you are involved in the payment process that involves money, I think it is fair enough that there is some regulation. But of course, what you wouldn't want to have is to throw at small fintechs the whole bunch of regulatory requirements, because then, of course, if you want to create competition and if you want to create new players, then you don't want to sort of impede that from the start. And I think one of the reasons why probably some of the US big techs became as big as they are today is probably because they didn't have that many regulatory requirements. So I think in the sense in Europe, I think you always need to balance the two, to not come in too heavily on regulation at the start. But of course, we welcome, in terms of the PSD2, we welcome the regulatory requirements there, and I think it also helps us to explain that to consumers and also to merchants that we are now a regulated entity, and of course it also helps with the interaction with banks if you can sort of demonstrate that you are supervised by the competent authorities.
Jörn, you mentioned before the panel that you were at Amazon at one point, in addition to being a banking sector guy. Amazon is not part of Libra. What's your sense, just as an industry veteran, on what is new about this? What is just competing with what's already out there? Where's that going?
I can't really speak for Amazon anymore. But I think with Libra, I think my impression of Libra, I mean, there's a lot to learn still. I mean, yes, they've just put out a white paper, but the devil is in the detail and how it would work. And, you know, while they're sort of attaching it to a financial inclusion goal, if you actually decided to solve financial inclusion and perhaps even financial education in that, I would not come up with Libra. I think there are much better ways to solve financial inclusion in the world, whether they're national IDs in India, or just general education on finances, free internet. You know, there's many, many ways that you can do this. So I think what has happened so far with Libra is that I've got a piece of technology, let me go and find a use case for it. And from an Amazon perspective, that would always be a no-no, because you're being technology-led rather than customer pain point-led. And that, you know, isn't the customer obsessive mentality that a lot of companies now are taking on board. The thing about Libra, I would sort of say, is a little bit more worried. Well, this is what I would be thinking about, would be more the wallet that Facebook would run that sits on top of Libra. With 2.4 billion customers, it will be ubiquitous. That will be the wallet that you use. And there isn't a consortium of 100 members controlling that. So how do we make sure that we have the proper rules around that wallet? So the actual Rails itself, I mean, quite frankly, you know, the technology is cool, but does it actually provide anything incremental of what we've got today? I mean, if we had instant payments across Europe, and I know that's an agenda item for many people here in Brussels, that's the same thing. I mean, it's just putting reserves of money in bank accounts and then taking them out when you need them and being able to facilitate an instant payment. So I'm just not really sure what the value proposition is. And I think that will come out as the days go by. There was a lot of questions, so I did want to kind of address.
These are great points, though. Thank you. Keep going.
I did want to address some of the other things. So I think, Carson sort of brought up a big pain point for us at Santander is we do want to invest in fintechs. We do want to become an open platform that provides financial services that enables other companies. But if at the moment it feels that if a tech company becomes part of Santander and provides their knowledge and their expertise, we reciprocate by more stringent rules and steps and elongating the time frame to market. And while you may agree that that is actually very beneficial, like security and protection and cybersecurity and all those types of things. But in some senses, you've got to be able to take a little bit more of a risk, get the product into market, test it, learn from feedback, and then iterate quickly. And that's what we've learned from the big techs and startups. That's the way to build great products. It's not to just put your product out there and say, that's it, I'm done, and walk off to the next agenda item. It's a continuous process that you have to go through. And then I am concerned about the investments being made by non-European entities into European countries. I think what we sort of learned in the past is that payments is a way to access customers. If they can't pay for your service, you can't build a relationship with them. So if you've got external entities coming in and buying up, certainly payment companies in Europe, they're literally buying up customer access. It's not about a payment rails or a business. They're buying up the ability to interact with customers and blocking potentially European companies from doing that. So that competitiveness and that, again, I keep a broken record, level playing field is super important as we think about having a vibrant European industry.
It's a really good point. Etienne, I'd love for your take on all these things, and also I'd love it if you could pick up this idea of financial inclusion. And in the question of Libra, how much of it is a new product for people already in the system versus a potential way to bring people outside of the traditional banking system on board?
Yeah. Of course, I cannot speak for Libra, and as it was said,
we're being philosophical.
The devil is in the detail. I don't know what you meant by the devil. But I think, I'm sure. I think actually financial literacy is one thing, but I don't agree that the young generation is digital literate. Yeah, they can use, but they don't understand what it means. So I think they need as much, or we need probably as much financial literacy than we need digital literacy. I would certainly not believe that actually a company started with an F is a charity. I don't think they are doing that for the good of the people. I think they pretend to, probably because given all what's happening and around them, they may have to. Well, even though I'm sure that some will be used for helping the less favored part of the population, but I don't think that's where they're coming from. But we shouldn't delude ourselves and believe that this is done for the good of the world and for the good for the people. I still believe that actually it's still time for others to react. I don't think it's too late, but as I said several times on purpose, I think the clock is ticking, because especially I think banks are trusted. They're not loved, they're not liked, but they're trusted by you. I'm not sure they are known or trusted, certainly not liked by your children, who probably do not care, who do not understand what the bank is and know what Apple or Facebook or whatever is, that they understand and they trust because it works and it helps us do what they want. So that's why I'm saying the clock is ticking. I still believe it's possible. But I think going back a bit to a number of things that have been said, I think we suffer a number of things in Europe. I don't think there is one Europe. And I don't think we react the same way across Europe. I mean, it's very interesting to see where those outside of Europe new guys go, where they establish themselves. And you have to think why. And you have also to think what that gives them indirectly as potential power beyond beyond that country. I mean, I won't say more, but I think it's not by chance. There are first level, second level reasons why they do that, because they are smart. I think the only thing we should be careful is to feel they are not smart. They are very smart. I think they understand how Europe works or doesn't work, which is probably what they understand better. And that's why I think it's indeed a tragedy to see, because of competition rules or because of whatever, all the jewels of Europe get at the end of the day sold to outside of Europe. So what are we having in our DNA that doesn't work the same as it works in the US or in China? What is in the European DNA that creates that phenomenon that we are successful? And when it's successful, well, we just get out. We just get our money back, money in. And so I think there are huge questions, societal, policy questions. And Europe is maybe Europe for payments, but it's actually putting something that is European harmonized, but on top of something that is not harmonized at all. So it's loose comments, because I mean the questions were very diverse, but I think there are lots of very interesting policy, societal questions which I'm not sure are really addressed, because they're complex, and because unfortunately sometimes different interests do not coalesce in the same direction.
That's been a real theme of certainly the past 5 or 6 years, is systemic threats and systems generally overlaid atop a fragmented environment in many different ways: regulatory, business-wise, market-wise, language-wise, jurisdiction-wise. Nicolas, you brought up Mark Carney, which reminds us that central banks have always been the ones left holding the bag whenever the fragmenting of systems exposes a vulnerability. So as you respond to the questions we've had, I'd love it if you could tackle this idea of a central bank, as a lender of last resort, and where they fit into this network.
Well, central banks do monetary policy, and that is transmitted through the banking system. And there is a reason why banks are regulated and supervised, because they're special. There's a reason why the public policy framework prohibits some forms of risk-taking by banks, because banks are inherently risky. They're super leveraged by their very nature. That's part of the model. It's a feature, not a bug, but there have to be some limits on the leverage. There have to be some limits on the risk-taking. Banks are different. And I think this has always to be kept in mind when we talk about competitive neutrality and level playing field, because indeed it is a feature of banking regulations that there are some activities that non-bank actors are freer to undertake than banks are. Not a bug, it's a feature. So activity regulation sounds great, but it doesn't imply that a given activity should be regulated the same way if it's done by a bank or by a non-bank, precisely because banks have this unique role of taking deposits, of underpinning trust in society, trust in payments as well, and lending and creating money and transmitting the monetary policy of central banks. So this is not to say that the notion of activity regulation is meaningless. It's just to say that there are very justified reasons for not having a level playing field, whether it's a bank taking the risk or a non-bank taking the risk. I'd like to come back very briefly to what Etienne said about, what is it in Europe that implies that we don't have these big players like Chinese and US. Actually, when you look at the financial system holistically, Europe has big banks, big insurers, lots of banks, lots of insurers, very few non-banks. US has a lot of non-banks, China has a lot of non-banks, financial firms, asset managers, lease service providers, you name it, and various different market segments, and that well predates fintech. I'm not talking about fintech here. I'm talking about the structural features of the financial system. Now, that's been a long-standing choice in Europe to say, well, if something is financial and can be done by a bank, it should be regulated as if it was done by a bank. Leasing is a very good example of that. It's not necessarily a policy choice that leads to an environment that is favorable to high-growth firms that don't have tangible collateral. There is a vast literature about this. This is an underpinning of the whole so-called Capital Markets Union project. If we had a financial system which is less uniquely reliant on banking intermediation, maybe we could have a more vibrant economy because there is some connection between these different themes. So this, again, is not to say we need to repress banking. I don't think we have to worry about that in Europe because we have the most asset-heavy banking system in the world. It's just to bring a bit of a sense that these issues are related in many different ways and not only in terms of a narrow view of competitive neutrality. In a way, you could remember the debates we were having on financial stability, and I think it's interesting to revisit those debates just before the financial crisis. I'm old enough to remember some of the financial stability conferences in, say, late 2006, early 2007. Many of them, a surprising number of them, and those of you who are familiar with the European Parliament environment remember that we're about hedge funds and private equity. Now, one thing that the great financial crisis was not, to the surprise of many, including myself, is the crisis of hedge funds and private equities. They may have played a role. I'm not saying they were completely outside of the picture, but I think we rediscovered how important banks were, and specifically in Europe. So again, I think it's very difficult to keep the right balance on all these things. Very big challenge for regulators. I think the diversity of perspectives has to be kept in mind.
Thanks very much for that. It circles back to banks versus shadow banks, round 797. Chirag, I thought I saw a light bulb over your head when Etienne was talking about fragmentation. So maybe you want to come back to that. Oh, you've got a microphone, yes.
Yeah, I think it's sort of back to the same sort of point, really. And I think it's it doesn't really matter who this entity is. It's really the speed of change that can happen. So I think what we're realizing, especially in the payments world, is things are accelerating. Things are no longer taking years to deploy. And while policy and regulation still is maybe operating at a different pace to the rest of the industry is moving forward, whether you like it or not. And things are changing very fast. I mean, I was just talking to Etienne before we came in here that, I've been in payments for like 20 years, and I've had to wait 20 years for it to become cool. And now is the time for all of this stuff to really happening. It's just, as I said before, payments is no longer a transaction. It's a life cycle and a series of events that lead to a transaction happening. And all the different players and what their roles are and all this sort of stuff, I mean, that's just added complexity, which just invites disruption and new opportunities. So I think we're in a great time. We still need to figure out how we operate in this new world. But the industry is not waiting. Everybody needs to be operating at a different cadence now.
One sign that payments is moving faster than most of the rest of the financial industry is that both the questions and the answers in this panel have been much more succinct and to the point than the last few banking panels I've done. So we have time for more questions. Yes, okay, we'll start right here in the back, and then here, and here, and here. We've got 4 lined up, if I saw them correctly. 5, okay, all right, excellent, 5. Thank you.
Okay, Gao from the Chinese mission. I just want to echo the panelist from here who said that European market, payment market, in general is about 5 years behind the Chinese market. That's exactly my feeling. I was here about 1 year ago, and I had a problem. In China, wherever you go, it's almost a cashless society, especially in the big cities. And then when you come back, when you come over here, I do have a problem. I downloaded an application, but when I go to the supermarkets, how often the staff members don't know how to use it. They have to check with other colleagues. That's really a trouble for me. I have to carry, the credit card or the cash. In China, I don't carry it any longer. And then I do have this question. It's a simple one, but I haven't found the answer so far. Maybe it's a little bit naive. So why can't Europe have an equivalent to Facebook's Libra or, a European champion? A European champion in payment market or in payment technology? Is it lack of political will, lack of customer need, or lack of investment in technology, fintech? Or it is too much regulation, you just mentioned, too much suspicion, too much hesitation, or it's just your DNA? So
That's a great
that's my
question. Where is our fintech Airbus? Next question here in the front.
Hi, I'm Brett Hecht from BVA. I'd like to come back to a question Nicola raised in the beginning. The question of governance between finance and data. We had been talking about data, etc. And we had been talking about the importance of all the big techs joining this market, etc. And you raised the question, but finally, what would be the answer? Who should govern, who should regulate this space between data, of transactional data we have in payments, you mentioned that too, but all this other transactional data which is happening on Facebook, on Google, wherever.
Excellent. Okay, back to Francesco in the back.
My name is Francesco Guarascio, Reuters. Just a question on Libra again. Libra essentially is an instant payment system, and we have the embryo of it in Europe. The TIPS system has been mentioned, created by the ECB, but we are very far away from setting it up because only a handful of banks, including actually Santander, have joined the project so far. But very, very few of them. And what we have now is just some national schemes, which in a way answer the question of our Chinese friend, because it's just because it's everything done at national level that we don't have a European champion sometimes. But my question is, do you think that TIPS is could be a real alternative to Libra or whatever else will come up? Because if it's not Libra, it will be something from another big American company or Chinese, I guess. And how long would that take to have it? Thanks.
Right. Here at the end, and then all the way at the end over here, and then we'll go back to our panelists.
Thanks. Good afternoon. I'm Simon Kolbock from FECIF, which is the European Federation of Financial Intermediaries. Just a comparison, old comparison on a question. We haven't mentioned, I know it's an old story, was PayPal, which was one of the first disruptors in here. What I think was interesting in PayPal is it did not go and undermine the existing payment system like credit cards by charging half the price of credit cards. It actually went in and charged about 5 times the price of credit cards. And how did they charge 5 times the price of credit cards? I mean, in terms of the back office cost, by offering a value of security to customers that was actually already included in a credit card, but no one was pushing it. So it was pure marketing, worked very well. And just to build up on that, back to the point that was raised earlier, where's the story? Where's the customer story in the payment? How do you actually make something that's useful for customers and that will be valued by them?
That's a great question, and we certainly have people on the panel with experience helping that use case become something that people can do versus be intimidating by. I'm stalling for time a little while the microphone crosses the room, and then we will go back to the panel for answers.
Hello, Anselm Rodenhausen from DG Connect. Many thanks for the very interesting panel. You raised many questions that are among the hot topics that are right now discussed at DG Connect. For example, how come that the big tech players are all from the US and China? What can we do different here in Europe? Another hot topic at the moment, of course, is data portability, access to data. You addressed PSD2, correctly saying that now that the banks have to give some data to third parties, where's the reciprocity? And I would like to ask you if you, not only you who came up with this point, but in general, what from the banking, from the finance institution perspective, how could such an access to data look like? What is the particular data that might be interesting to the industry, and what are the services that might be evolved around that? You already addressed that a little bit, But I very much like the question from the colleague from the Austrian press who asked, why should we trust Facebook with our finance data? But you could also turn around the question and say, why should you trust big tech why should you trust the banks with some of the consumer data, given that the banks, sorry to say so, were not always among the best parties to consider very complex scenarios as the 2008 crisis showed us?
All right, this is a great group of questions to head into our second round of discussion. We have not quite 20 minutes left, so we have time to think about these at some length. I'm going to mix up the order of speaking just to keep people on their toes. And Jörn, I would like you to go first, particularly the PayPal question. That seems like something you can really speak to.
Well, again, I mean, I can't talk for PayPal, but I mean, indeed, I mean, they did...
philosophical question.
Yeah, I mean, they did good marketing. I mean, they sort of did it consumer-driven, so they offered it sort of an easy solution for consumers that perhaps didn't have a credit card, and I think that was sort of very common, particularly in Europe, where you have some of the bigger markets like Germany, where the card use is not yet that ubiquitous as it is in other markets or in the US. So obviously, a sort of non-card solution was something that was really that everyone was looking for, and I mean that's also something that we are sort of providing. So I think, and that's what PSD2 of course is also attempting, I believe, and instant payments in that. If you connect it as well, is really to create an alternative rail for payments, because I mean you have card payments. But in essence, you just have sort of the card in between, but you're still moving the money, in essence, from one bank account to another bank account. So the question is only how does it arrive from point A to point B? And there are a couple of rails, and cards is one, and then you have sort of the direct, the credit transfer or direct debit as alternative forms. In terms of what you asked perhaps on sort of how can access to data look like, I mean, okay, PSD2 already opened up the market in particular for payment data. What sort of TPPs have done in the past that were already active in the market, like
TPP is...
Sorry, the third-party providers. Sorry, I'm talking a bit jargon here. So what I meant by that is it allowed sort of new providers to access data from banks. In essence, in the past that happened through the consumer interface. So you basically were able to see what I as a consumer see when I log into my bank interface. That data was then shared with TPPs. What is happening now is that banks can create a dedicated interface to sort of make sure they control to some extent what data is provided to third-party providers. But of course, when you offer a service, I mean, the whole point is always about offering service for consumers, because you want to offer a product that the consumer really values. So there's no point of offering simply a simple transfer. I mean, what you want to provide to the consumer, and that is in that case the end user, but also your consumer for a third-party provider, which might be the merchant, is sort of an easy solution, a confirmation that the payment has gone through. You also want to make sure that you are able to do some fraud prevention. For that, you need a certain amount of data that enable you to use these and to offer these facilities. You can have, and that's sort of part then of a wider future discussion, the development of open banking, whereby you would offer, you would open up other services as well to new providers that would be able to offer potentially better services for consumers. It can also be interesting for banks, because you can also compete with other banks sort of in that space. So it is not just for third-party providers, but it is sort of for everyone really to compete in that market for the consumer.
Thanks. Etienne, can you speak to Francesco's question about European alternatives and whether Europe?
Yeah, absolutely. I think I will say a few things that I probably said when I started. I think first, if it's the customer value proposition not there, whether it's tips or anything else in terms of infrastructure, it won't work. So, I mean, it starts with putting in the hands of the consumer what it wants, the customer value proposition, and that one actually, which is new, goes beyond payments. If you just offer payments, it's not enough because the others come from outside of payments and add payments. What we have to do is actually based on what we can do, which is payment, but enabling other things than payments because that's what the customer wants and that's what the others are offering. The second thing is fragmentation. I think that's part of the European DNA, and we just finished a phase to try to integrate the old legacy credit transfer direct debit schemes, and the new stuff is popping up, sprouting up in a fragmented way across Europe. So that's where time comes, because if we are not fast, the fragmentation will be there again for the new stuff. And that's what we cannot afford, because the others that we spoke about don't come with fragmentation. They come with a global solution under a global brand, offering many things that the consumer seems to find wonderful. So we have no time. That's why I was trying to say that we are working hard, and I don't share your pessimism, even though it takes time. But unfortunately, moving from batch payment systems to real-time payment systems is a huge change in terms of investment, in terms of operations. So like it or not, it takes time. It cannot be overnight. And that's, of course, a problem. But we managed to get the whole ecosystem to move. You said 51% of the PSPs, payment service providers, already adherence to the SET instant scheme. That's correct, but actually it's even 60% in the euro area, and the ones who tend to join are the largest ones. So I mean, if you were to look into potential number of payment accounts or volume of transactions, it's much higher than 51%. So I think the glass is half full, and even more than half full, and I'm sure that within 18 months maximum, we'll get it totally full. And we are already now, building the basis to have solutions that are pan-European by design, even though fragmentation is there, but enabling, hopefully, touch wood, to provide the toolbox with which those individual fragmented solutions will be able to offer pan-European interoperability to their customers, and offering altogether something that works like a pan-European instant payment-based solution package, because it's not going to be one thing. And again, back to something that was said, PayPal, I think there are, even though it's not the only reason, one reason is what you said, and some said it's the customer value proposition, the customer experience. But, and I've lived through it, so I know what I'm talking about. I think there are intended consequences of regulatory decisions, for good or bad reasons, but I can tell you that the landscape would be very much different now had some things not happened actually 8 years ago, 7, 8 years ago, for good or bad reasons. I won't say anything, but if that had happened, and that was regulatory intervention, the world of payments in e-commerce would in Europe look quite different. That's history. We should not moan and weep about it. We should act now, together, with all the stakeholders in Europe. And I think that's what actually is being recognized by a lot of partners in the ecosystem, including those who were maybe seen as challengers. I think we all realize that it's only together that we can challenge the one starting with an F or an L now. Thank you.
Thank you so much for that. Johannes, we come back to you again about the non-European environment and why maybe it's more startup friendly, or maybe it enables more new entrants into this market. Can you build on what you said earlier after the latest round of discussion and questions?
Well, actually,
anything else you want to say, but that was what I was interested in.
Yeah. Well, actually, it's just an observation. What we see is that actually it isn't. PSD2 is, I think, a great initiative. Only if you look at it, it's been there for 4 years. We're going to go live just after 4 years. We look at the European landscape. So the PSD2 has been put into national legislation everywhere, which is different, of course, again, in every country. And so we have no harmonization at all. So we again have a very complex thing that has a lot of potential in it, but due to, regulation, we try to kill it, and legislation. And because, for instance, for financial illiteracy, you could easily say, well, since we have the open standards, When you do a payment, automatically the system will check whether you have enough open available on your account, and even give you a warning if you go below a certain point. I mean, this is typically something we could do with PSD2, so we think we could do great things with it. But again, and that's a bit the shame. It's 4 years. It's maybe going to go live in September, but the banks are already putting up all kinds of hurdles in order to not to have to go into production at that moment. And it's a pity, because at the same time, the Chinese and the US is just passing over us. And the Libra, if the Libra ever comes, it's not going to be the Belgian banks sending to them a letter saying, oh, well, are you complying with our legislation? If not, you have to stop in Belgium. You just laugh and keep on doing. I mean, that's what we're confronted with. So, but I don't know how we can change it. I mean, I'm not in legislation, but that's a bit a pity. So
that's a great example too.
Cannot have a harmonized market.
I mean, what a great example of a piece of data that, on the one hand, consumers benefit from everyone knowing if they're overdrawn or not. On the other hand, that's something that people can exploit if it's not managed correctly, if people know that you're overdrawn. So it really encapsulates this issue really well. Nicolas, I'd like to kick it back to you. And also the second half of our question from China, where's the European champion on this?
So Europe has a lot of large successful companies. Actually, we have more than our share on some countings of large successful companies. Where we don't seem to be very good is high growth companies that make it very rapidly from the proverbial garage or whatever other small space to a global leader. And the financial sector is a good example of that. I don't think there is any significant bank in Europe that is less than 100 years old. And very often they're more than 200 years old. If you contrast this with the US and China, obviously you see a very different picture, but this is true also of the big tech players, where there is a lot of technological innovation in Europe, but it tends to happen in established companies. So why is it that we have this difference? Well, I think the answer is not the same if you contrast Europe to the US on the one hand and to China on the other hand. Because in China, there's this groundswell of catch-up growth, which creates a dynamic which, in a way, we had in Europe during the post-war period to a more limited extent. But this is not something that is available to us at this point. So I think the comparison with the US is much more apt for that matter. And why is it that the US has all this, big tech companies that Europe has no equivalent of? I think I would relate it to the question that was asked by Britt. We're talking about regulated services here. We're talking about regulated markets in a lot of applications. We're talking about data services, financial services, digital services, and we have very fragmented enforcement frameworks. So I'm not saying regulation is the only side of it. I think there's a big role for, the research infrastructure, labor law, product market regulation in a number of different segments, and the financial system itself. I alluded to this, alluding to the so-called Capital Markets Union agenda. But my broader point here is that if we have markets that are fragmented because of different, not only differences in rules, but differences in the regulatory enforcement, which, the licensing, the supervision, the authorization framework, things like that, then you're not going to grow champions because, it's complicated enough to be big in Belgium, and you're not going to make it big in Europe, let alone big in the world. And I think here we really have a lot of space to make progress. Data regulation is the quintessential example of that. We've done GDPR, which is a global innovation, puts Europe on the global map. We're the pioneers. Who do we entrust it? To national regulators. So the Irish National Data Authority is a reference authority for Europe. Is it really what we want to do if we want to grow champions? Probably not. Financial services is fascinating for that. I remember debates 10 years ago. And there were two sides of the debate. There were those who were saying, well, we need European supervision, and those who were saying, well, you can't have that because it's utopian. Now we're in a different space. We have European supervision. We have ECB banking supervision. We have ESMA supervision of limited market segments. I mentioned trade repositories, also credit rating agencies, and a few more with upcoming legislation. We have the proof of concept. So essentially, the only excuse for keeping the regulation national is either subsidiarity, if the market is very local, and that's legitimate, or turf protection and special interest, which is less legitimate. And in many market segments, it's the latter more than the former, because precisely we're talking about market segments where there are scale effects that would justify an application of the principle of subsidiarity that identifies the European level as more apt than the local national level. So I think, in a way, it's a collective choice we're making through a political process, but we have to be very clear-sighted about the nature of the choice we're making. By maintaining the fragmentation of our regulatory framework, we prevent the growth of European champions. It's either one or the other.
And Utopia has moved on to deposit insurance. We'll see where we go.
Yeah, but that's...
Before I give the floor to Chirag, to whom I'm extremely grateful for catalyzing this event and really getting us all together to have this discussion, I'd like to thank all of you here in the room who've made the effort to come out and participate and take part. Also, all of you on the web who've been watching. This will be archived for those of you who want to come back later and see what was said. But it means a lot to us that you came and that you paid attention. And we just really thank you for coming to Bruegel. So, Chirag, thank you for coming to Bruegel. And what do you think?
Well, maybe I just wanted to build on the PayPal question, because I think that's a great use case that we can sort of apply to the Libra example. So PayPal, like a few of you have said, came out because there was a very specific customer need. It was attached to eBay. There was a lot of sellers on there, and customers didn't think they were going to get their products, so this proposition came about. It grew in success, and then they spun it off, and it's turned into literally the e-com payment method for medium and small merchants. That's the piece that's missing from me from Libra. What is the customer value proposition? What are they trying to solve? I don't quite understand that piece. And then you also need to ask yourself, well, why did they announce now? They haven't got a product. They haven't got anything. I mean, they've got 100 members who have given them 10 million and said, yeah, we're going to work with you. So what was the reason why they actually came out with? My personal view is to really get the reaction of the industry, to sort of see what is going to happen if they were going to do this. So it gives them time to react. What it also does, it gives time to react for many other competitors. And don't think that Libra or Calibra is going to be the only one. There's going to be many options out there. But what will drive success is the customer engagement and the solving of a customer pain point. And I'm not clear what that is with Libra at the moment. So there's a lot to be learned. I know there's a lot of information in the white paper, but I think there's a lot of details that have been left out, which I suppose we'll learn of over the next few months. Saying that, though, the last point I wanted to make was really that we sort of talk about regulation and the rules as a very linear kind of concept. This is the regulation and everybody has to follow it. But in practical reality, people have to interpret those rules. And how much risk you want to take as an organization against your financial fees that get applied to you if you get it wrong, or brand damage if, again, if you get it wrong. You have to figure out how much risk you're willing to take. And it's that risk that slows you down, quite frankly, and puts on a lot of additional steps and processes and complexity into it. So while we need to get the regulation right, we also need to get companies comfortable with taking a little bit more risk in there and allowing the regulators to say, okay, here's a little bit of leeway. If you are just testing products in market, you don't perhaps need to have all of the financial security and all those other pieces in place so you can get data. Obviously, you don't want to put anyone at risk, and you don't want to misuse the trust that customers have given you. But there needs to be a little bit more leeway within which we can play, as the big techs do. They test this stuff thoroughly. They try this stuff out. They see what works, and then they iterate. And I think that's the piece that's missing from the financial services industry, certainly in Europe, anyway. Thank you.
Thank you so much. Thank you, all of you. Appreciate it.